Hi, it's John Kelly. In this module, we are going to discuss how you audit estimates and going to use a practical example. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, the issue I was presented with was a food bank, and management had asked, and they said, we'd really like to record revenue for the value of the food that's donated, because of course a large portion of the food that they distributed was donated and another portion was purchased with donated money. And the food bank planned to use a dollar estimate based on weight. And other food banks had developed methodologies where they determined what the value of the weight of food was, and they'd come up with a way of estimating it. Now, the question I was asked was, how hard should we audit the estimate of value? Should we get many estimates of value and compare them all to see if management had the right estimate? And as an aside, an estimate is an estimate. It can never be right. It will always be an estimate. And I suppose you can do estimates better or worser, but it's always an estimate. The other thought was, people said, well, maybe we should just tell the client we can't do it. It's too hard to come up with this estimate. And then the discussion moved on, well, should we pick 60 items? Should we weigh 60 items? Should we do 60 items of something? Is that a good way to solve this problem? And I think the point is, you don't start your audit planning with procedures. That will be inefficient. And again, if you just plan to use the same set of standard procedures in every section, it may not be appropriate client to client to client and may be incorrect. And what we should always do is we start out with materiality, then we do risk assessment procedures, then we assess the risk of material misstatement, and then we perform procedures. And we also have to link the results of those procedures back to the assessed level of risk of material misstatement and conclude that the procedures have properly addressed the assessed level of risk of material misstatement. So I think what should have been done was 2 accounting questions and 1 auditing question should have been asked. The first accounting question is this a good idea? Is this good information? Is this useful information to users? And the second, there is measurement uncertainty. Have we properly disclosed the nature of the measurement uncertainty? And then the auditing question, and I've kind of said that already, is we should have thought about what the risk of material misstatement was in this area, and then having concluded on risk of material misstatement, we can then design procedures. So, is it a good idea? Is this good information for users? And I think the clear answer is yes. Let's say half the food is donated and half the food is bought with donated money. The financial statements don't show the total value of the food collected and donated, and that would be a very useful piece of information to users trying to understand how effective the food bank is. So it's good information, and I think it's something that clearly should be disclosed. Now the second question is, there is of course measurement uncertainty. Well, what are the circumstances? And what do the users need to know about what we have done? Well, I think they need to know that donated food is recorded at an estimated value. I think we should disclose how the dollars per ton is determined and reference the authority. We use the estimate prepared by ABC Food Bank. And then I think we'd have to say something probably about how the weight is determined, that we weigh it all when it comes in. Presumably we weigh the food we buy too, I don't know. But describe how we determine the weight. And then we'd have to talk about the resolution of the uncertainty. And really there is no resolution, because we're going to go debit expense of food given away and credit revenue of donations. So even if our estimate is out a bit, or maybe even more than a bit, the financial statements are still going to be materially correct because of the nature of the entry, debit expense and credit revenue. So then we come to assess risk of material misstatement, and I think by now we're going to go, the risk of material misstatement in the financial statements is low and very low. There's no effect on income because it goes debit and credit the income statement. So I would say, and perhaps I exaggerate, but I think we should take 15 minutes to consider the value that they used. What's the authority? Is it an appropriate authority? Can we analytically compare it somehow to the value of food bought? I'm sure there's some way we could do that. Shouldn't be hard and can probably be done analytically. I think it's important to consider how the weight is determined, and can we determine that analytically? And then we need to consider the disclosure. So it shouldn't take very long to audit, not very hard at all, because the risk of material misstatement is so low. So, in conclusion, it's good information for the users. We need to check the disclosure, and we do not need to do a lot of audit work. So, thanks for listening.